We're very much more bottoms-up oriented than top-down, but still, this is a major cloud over the market that creates a lot of uncertainty. And as we all know, investors do not like uncertainty. So now I think people can, kind of dig through the rubble a little bit, find some of those names that maybe they were undervalued for other reasons that are very company-specific in the way that I do, and put them away. So I think it's a good opportunity. Would you be putting money,
as apparently a lot of people are today, into U.S. auto parts makers or the U.S. And international manufacturers like GM and Fiat Chrysler?
So again, we don't look at things from sort of a top-down approach, but if there's individual stories that are cheap because of those macro factors, then it is an opportunity to buy. I think a lot of the semiconductor names have come down. They've been under pressure, and there's some good values there that we like a lot. So certainly an opportunity, in my opinion.
Tim, if you have you been buying into this rally, and if so, what?
Yeah, Tyler, we've been overweight U.S. equities and small caps in particular for some time, but we've also had a bias towards EM, and that's hurt the last couple of months. And Bob Pisani was talking about the weakness in the dollar, the sentiment improving with trade. We think a lot of the weakness in EM has been driven by higher rates here at home, better economic growth, but a lot of it has been just a flight to quality, people worried about the trade rhetoric. And as that trade rhetoric dissipates, if you look at EM equities broadly, from a sentiment, valuation, and flow perspective, they've been really, really shunned. And we think that asset class in particular, especially as trade rhetoric improves, offers meaningful upside into the end of the year.
As the trade rhetoric improves as well, though, Tim, is that less of a reason to continue to invest in small caps? As
people sort of look further afield outside the U.S., that may take some of the bloom off the small cap rose. But if you look at the structural tailwinds for small cap right now, the tax cut, the deregulatory environment, incremental buybacks here at home, we still think small caps and EM, if we had to pick two specific equity niches, are still the most attractive as we go into the end of 2018.
I hate to take on the role of Debbie Downer here, but certainly there have to be some headwinds here when you're looking at geopolitical problems, the president's problems with some legal issues, constitutional issues, midterm elections coming up, and a lot of political friction there. Sandy, what are you seeing as potential challenges for the markets?
Yeah, I mean, so one issue is that if we solve all these trade war issues, then you're going to see, if the Fed is, almost a foregone conclusion, they're going to raise in September. December might be also a foregone conclusion if all this uncertainty is put to bed, and we don't have to, then you see where inflation goes and that sort of thing. So definitely a lot of issues around the White House, et cetera, but we're just laser focused on finding good quality names that trade at reasonable prices, and we're going to buy those and sort of try to forget about the macro clouds, et cetera.